and welcome from the National CSR Network to one of our expert interviews, which help us expand our understanding of CSR. But today it's an unusual interview in that it's not focusing on CSR, but on one of the emerging concepts which is going to be of great importance to all of us in the CSR and development sectors, which is ESG. I think it is a term we are still getting to grapple with. And to help us in that journey and to give us clarity on this issue, we have a passionate ESG and sustainability professional with us today. This is Priyanka Dhingra. She is ESG Analyst, Investment Research at SBI Funds Management. She handles the ESG integration and stewardship at SBI Funds across all management asset classes and represents AMC on global and domestic ESG forums. She is a professional with 12 years of experience in sustainable finance, environment, climate change, etc. She has previously worked to automate ESG analysis at MSCI, on environment and policy frameworks at FICCI, in hands-on EIA at the Ramki Enviro Engineers, and she has also taught environmental studies. Priyanka has a PG from the Terry School of Advanced Studies and also a certificate from CFA Institute on ESG investing. So I don't think there can be a better person to take us through this concept. Welcome, Priyanka.
Thank you so much, Meena. So happy to be able to talk to you and to contribute anything to the India CSR network. And I think it's very interesting because these concepts, these terminologies are so intertwined, and it actually deserves, a specific dialogue where we can, try to understand what is the relationship and how does it work.
Absolutely, absolutely, yes. So let me start by asking you, Priyanka, a very, very basic and fundamental question, because we must start at the base level. What is ESG? There is such a plethora of these terms and acronyms, and ESG is so dominant today as we see in the media. So help us to understand what it is basically.
Absolutely. ESG is just logic. It's common sense, I would say. It should not be really looked at from a specific lens, I would say. So it's just a term. It's an acronym for environmental, social, and governance. It's principles that you generally do look at or should look at while you are making investing decisions. And for a corporate, so I'm from SBI Mutual Fund, so I'm talking more from an investor perspective, but for a responsible corporation also, ESG is equally important because it is very intrinsically tied to the notion of sustainability. So how ESG comes into being is that you have to be responsible, not only to your shareholders, but also to your stakeholders. Now, those stakeholders could be your employees, could be the communities with which you work. It could be the larger environmental matrices from which you derive your natural resources, where you give out your waste and byproducts. It could be your customers. So at large, whoever are your stakeholders, you have a responsibility to them, whether you are an investor or you are a corporation. That is where ESG comes into play, because you not only are expected to be environmentally conscious and responsible, but socially also you have a lot of responsibilities. And of course, a well-governed business can actually help to meet these social and environmental goals, which is why the ESG practices, which should be logical, which should be incorporated without claiming to be ESG conscious in your decision-making processes anyway, because you are a part of an ecosystem. If the ecosystem gets disrupted, you yourself are at a risk of disruption, right? So it's logical to incorporate ESG. But yes, ESG has evolved from socially and environmentally, accepted notions of sustainability and corporate responsibility, which is now ESG, is being measurable now. It's now being adopted much faster.
Yes, indeed it is, because we hear that, almost 50% of all investments will be ESG kind of conscious or sensitive very soon. And in India too, there are many such funds. What will confuse, I can understand that this is what ultimately and implicitly a responsible corporation should be, which is it should integrate environment and society into its decision making. I suppose the one added layer is governance, which usually, CSR or environment professionals don't look at. Now it's a melding of all three, which is the most sensible way. It's responsible capitalism in a way, I suppose.
Absolutely.
But do help us understand what is this, because CSR has its own peculiar definition and operationalization in India after the law. So what is the interplay that, is there? What is the relationship? How do they fit into each other? ESG and CSR.
Absolutely. So if I may want to trace the ESG idea, the ESG terminology that has come into play, I think it'll not be wrong to say that CSR would have been the precursor for ESG or anything sustainable when it comes to a corporation or an investor. So for instance, in India, the bigger corporate houses have been in philanthropy from ages. Like they never needed a law. They were always into philanthropy and social investing, for example. But that really, was done out of a larger goodwill to the society, creation of, healthcare facilities, schools, educational institutions working towards lowering rates of mortality for women as well as kids, malnourishment, poverty. These were themes that were getting, sort of addressed by way of giving money, right? Because of philanthropic reasons. So that was probably the notion of CSR. Today, when we look at it, that is not the only expectation that investors or our larger society has from corporate houses. You cannot be a mining company degrading the country's forests and still doing some kind of, little CSR donation to an NGO which helps to, protect some tribal areas. It's a contradiction. So what investors and our stakeholders today expect us is to be responsible in every sense of the word. How we make our profit, how are the dividends being distributed, who is benefiting from these decisions, who is benefiting from CSR activities also. Is it the business itself that is getting benefited, or is it leading to a larger environmental or social good that you're doing? Mm-hmm. So this is how, ESG is actually connected to CSR. So imagine a corporation which says that I am into beverage manufacturing and is into various community conflicts with respect to water. It is a no-brainer for that organization to go into water, rainwater harvesting or creation of water aquifers or helping the communities recharge the water levels. It's a no-brainer because it helps you in your brand value. It helps you to fulfill your CSR obligations. It helps you have a supply of water continuously. It gives you the social license to operate. So do you think that should be separated out into CSR per se, or is it an intrinsic responsibility of the organization because it is beneficial for you to do that? So these are small things that are intertwined but are also separated. So today, if we look at ESG, we look at ESG from a quantifiable perspective, and CSR still has its qualitative information. So if, let's say, a company is doing CSR activities and has created a goodwill, there's a direct value in terms of goodwill. Now that's an intangible asset. As an investor, I might struggle to put a number to that goodwill or brand value that the CSR activity has generated, because there'll be a very long-term connotation with in an impact in a financial term. ESG, however, has a very, very quantifiable aspect today. You're working for the workforce, your gender diversity is improving. There are studies that prove that higher diverse workforce are more, better to retain, and they give you diversity of inputs, diversity of views, which can directly lead for you to better decision making, and that can give you profit. So that is directly relatable. You do good for environment, save energy, save carbon, and you are lesser in regulatory scrutiny. You save on fines. So there is a materiality associated with ESG, which is quantifiable. That is not directly replicable to CSR. So CSR largely still remains a qualitative aspect. However, with this 2% CSR spend rule, investors are at least able to look at if the company has been spending that 2% amount, you utilize it fully, or not. So we've seen companies getting multiple CSR awards and still failing to, use that amount fully and utilize it in a proper way for the last 5 years, 6 years. So that will at least now help the investors to understand what is the philosophy, and if there is a failure from corporations year and year again in fulfilling their duties. right and wrong, there are multiple arguments to this 2% rule, but at least from the quantifiable perspective, this aspect has improved that quantification a bit, I would say.
I mean, in this context, I suppose if we work towards making CSR more strategic and take into consideration materiality, it might move closer to improving the ESG rating. Because as you said, I mean, if there's a mining company and it's doing some work in schools, it's not really material in the same sense as, are you addressing the problems you're creating? So maybe, these two, if we can drive CSR more in these directions, it starts fitting into this picture better, it seems.
Absolutely, absolutely. So Meena, what happens is that there is a huge criticism around CSR activities when companies look at something in their own control. So for example, an FMCG company working with the farmers to improve the crop yields or helping them gain better prices in the market. Sometimes there are criticisms that this is for your own business, this is for your own good. Why are you calling it CSR? But I digress from that view. I would say that if a company has higher inclusivity, if they have a reason to do something which has a larger, connotation of social good also, and it benefits the business also, I think that can be driven in a much better way. So from an ESG perspective or a CSR perspective, if you are an FMCG chemical company and you have a direct relationship with the farmers or let's say the tier 3 suppliers, and you are doing something to enable them or doing something to engage the communities at that end, of course, it's a direct supply chain relationship for you. You're making your supply chains more robust, and there'll be an equivalent amount of interest from the corporate side to do that. So then that will not be the case that you put in some X amount of money and then you're done with it because now you have it in your books and you have met your 2% CSR contribution. And then who is handling it, whether somebody is monitoring it or not, that's just forsaken. So that should not be the case. For CSR activities, it should be tied in nicely to your longer business goals, because then you will have a much more say, then you will have much more interest in driving that. And that ties in very well with the ESG performance as well as the CSR goals that you have set for the organization.
Right. So how, when you say you quantify in ESG, I mean, what are the metrics for each of these E, S, and G? Just a sample, if you can share.
Yeah, absolutely. So for ESG, if you see, there can be 5 to 500 matrices that different investors would look at. But the very common ones that generally everybody would look at from the environmental side would be, depending on the sector that the company is actually in, could range from, let's say, destruction of habitats from biodiversity perspective, deforestation, air emissions, carbon emissions, waste, both hazardous and non-hazardous waste, wastewater, effluents, water consumption or water reuse, recycling. So those are some of the very important ones that everybody would look at. In the social side, it will definitely be, let's say, employees. So whether it is labor force or it is employee retention from the perspective of highly skilled workers, it could be product quality and service quality. For companies like financials and IT, it could be privacy and data security. It could be employee health and safety. It could be work-life balance of the employees. It could be community relationships, specifically extremely important where R&R activities are, supposed to be carried out. So what is the community's idea of your business? Are their opinions being taken or not? So that perspective. And of course, various other things, smaller things, which are like, for a bank, it's very important to be present in underbanked populations, for example. For a healthcare facility, how do you improve that, underserved communities? So those kind of social factors are taken into account. And governance specifically looks at how your board is constituted, because everything is driven by the board. So if your board is independent enough, if it is, good people are sitting on it. When we say good, we have then characteristics like how occupied are you? Let's say, how overboarded are you? How many boards are you sitting on? If you are an independent director, do you have any past cases of, any kind of misconduct associated with your name? What has been your strength like? What's your educational background or expertise? How many meetings have you been attending? Are the committees, independent enough to take decisions? Are the promoters strong enough? And then, of course, how are your audit practices? What is the compensation of the highest officials like? Is it very different from what the industry is giving you? Does it sort of show that you have very tight control on your pay practices? So how is it designed in that manner? Then, of course, your other than pay, your accounting practices are very important. So what are the auditors saying about you? What is the quality of auditor? Is your accounting practices right or not? So these are some of the broader themes that we look at when we look at ESG parameters.
Complex, as you said, 50 to 500, and it's kind of sector specific, right?
It is sector specific. Yeah, absolutely. Yeah, because there's this notion of materiality which comes in every sector. So different sectors would have different material issues which we look at. But governance, more or less, we will look at every sector in a similar manner. And some of the other things like CSR also, we would look at it from the perspective that, is the company responsible enough? But again, investors do miss out on looking at what are the CSR activities, and if a company has actually just given out money to get this done, or is the company actually involved? Because again, there's no metrics which will tell the investors that the company is actually involved. And of course, there are monitoring processes and all that, but I think investors have still not got that on in the exact way that they should.
No, here is one savvy investor. I'm sure you look at it. Right. So there's an investor perspective on ESG and CSR, and there's the corporate kind of operationalization or understanding of these. What are they different widely?
I would say they are different. They are different in the manner that, so from the investor's perspective, you can understand that in India, ESG is still a concept which people have now started to understand and internalize. It is not a very old concept. So these frameworks that we use to evaluate corporations are also evolving. So every now and then, whenever there is something new coming up, we need to change our frameworks or reassess the way we are assessing companies. I would say CSR till now is only looked at from the point of view of spending. So most investors would look at whether you have sort of finished that 2% of amount in the last 3 years or not, because that's the only quantified way of actually looking at it. But I think investors want more and more corporations to look at it more seriously, because now we are looking at impact. So interesting things have been happening across the world. More and more, regulators have been asking investors, are we able to, measure the outcomes, the real world outcomes of our investing practices? Now, when you look at real world outcomes, you actually look at your companies that you're investing in, and you want to look at the real world outcome that they have sort of, made. Now, one of the real world outcomes that they have is through their products and services that they are anyway capturing. But another important arm of their work is through CSR. And that positivity, we are still not able to completely figure out what is the real world impact that they have created. It is very nicely written down in their sustainability or CSR reports, but it is very difficult to understand how much of that is greenwashing or rainbow washing or whatever color you want to give it. It's difficult to identify. The corporations, on the other hand, I think are a little well-versed. But again, there are two kinds of corporations. As I said, one would be the kind who would have a budget and they need to spend that budget because they need to show it in their books. Those corporations are not looking at it from the top to bottom or bottom up of the equation of sustainability. However, there are corporations, organizations that have internalized the value. So there is a goal. And when that goal is set up at the board level, it percolates down to each individual level. When it percolates down to the ESG matrices of operations and to the CSR activities that they are following. The theme remains. So, for example, the Sustainable Development Goals are a very interesting example. Many corporations, if you see, have sort of chosen that, okay, we want to support XYZ goals, whether it is climate action or it is reducing poverty or it is health and nutrition as their targets, and they have set up long-term targets. Now the board decides that. Everything then you do is sort of aligned to that. So your CSR activities will also have a portion which is aligned to those broader goals that you have taken for the organization. So corporations, I think, should have a better hang of what their CSR activities are actually approaching at. Now, it's a cycle. Once the corporations have a goal setting process and their CSR activities as well as ESG activities are contributing together to that goal, it becomes measurable for investors also. Because then you report exactly the same thing which is expected out of you, and the real world outcome that you can create is then accounted for, it is then quantified, and it is very easily and very, in a great manner represented in your reports. So tomorrow, if we want to audit that particular area, we should actually be able to see the difference that you have created.
Right.
And again, when our regulator asks us that question or audits us, we will be able to show them that the real world outcome has been achieved. So it's a cycle. So I think corporates are at that position where their decision-making process can drive this entire cycle. So more investments can flow in that particular objective. And then regulatory cycle also gets completed, because it's a target for all of us to reach the Sustainable Development Goals till 2030. So I think, so there is a little bit of difference on how investors look at it. We still look at it from very, very quantifiable perspective, financial materiality perspective. Corporates, on the other hand, should set up long-term targets so that they can, reach out to those goals which are not in the near term, and CSR can help them achieve those long-term goals, whether it is in terms of relationships or in terms of social license to operate, or in terms of securing their supply chains. And I think so the recent example of COVID-19 hampering supply chains and shutting off all the businesses, I think that has again created a lot of buzz towards the S side of ESG, because supply chains are again and labor, again, two of the things which are absolutely critical for your operations, are now again in focus.
How much is the awareness? I'm not talking about the largest Indian corporates, but among the large majority of Indian corporates of this concept of ESG, is it rising very fast? Are they taking action?
I would say it is rising pretty fast, and I think a lot of regulatory push has helped. I would say that ever since the announcement that top 1,000 Indian listed companies have to publish their BRSRs, ever since that announcement has come in, a lot of corporations, so we get a lot of materiality assessments to do for companies day in and day out, and that's because everybody starting to look at their materiality, doing stakeholder consultations to understand what is material to investors, employees, customers, everybody, all their stakeholders. So I would say that yes, there is an increase in awareness, but again, we do not expect that information to be just put there in numbers because it is required by law. We want it to be actually making a difference. So I think any kind of reporting today, if it is very, very quantitative, will only catch the numbers.
If it's only tick boxes, then you're just about complying.
Absolutely.
You have a policy of this? Yes, I have. Never mind the quality of the policy. Sure. Yeah.
So one of the things that the BRSR we are hoping that will do is put things into perspective from the trends perspective. So, for example, if you say that I have a very high interest in reducing waste, and I have multiple projects for waste reduction, it will also ask you, what have you done in the last 3 years and how are the trends like? Have you actually reduced your wastes? So that actually helps us to understand if the policy is leading to any practical results or not. Before this was not possible. So yes, ESG awareness is rising, I would say, but we still have a lot of time to reach there, where we can tie our goals to ESG and start changing our services or products to suit.
But it's a very, very huge fundamental shift in the first in the corporation's mindset, and then actually rejigging strategies and operations. You might have to fundamentally kind of reconsider. So it will be at least a medium-term process.
Absolutely. Absolutely. Yes. And I think regulation has played a fantastic role here.
ESG buzzword of the day, but there are also challenges to this whole concept. There are criticisms, there are critiques. What are some of those? And is there a way that the ESG community is working to overcome this?
Yes, absolutely. There are a plethora of challenges. The first one we've already talked about, that there could be 5 to 500 indicators that you look at ESG, and they will differ across every single investor, every single corporation. So this basic understanding about materiality, this has to be developed, and it is not developed equally everywhere. And you have to follow some existing frameworks. Those frameworks may not be specific to your sector. They may not even be material to the geography that you are operating in. They could be different. So if I'm a water stressed country, yes, water becomes very important for me, even if I am not a very water intensive corporation, right? But if I am in a region which is not too water stressed, then maybe I can, look at the other things which are of priority to me. So materiality can differ based on geography, based on the unusual circumstances that your company is in, or maybe even because of the nature of business you are in. So I think that concept and how you rate. So first is materiality. You have to follow something, and how you decide on materiality will differ. The second is how you rate corporations. So today investors look at a lot of sustainability reports. There is a multitude of sustainability reports available. There is GRI, there is UNGC, there is CDP, now TCFD. Now we are hearing about newer frameworks every time. There is so much confusion that today, if I open a report, and again, the top listed companies, the top 50, Nifty 50 or Nifty 100 would again keep on reporting on these all frameworks. So in companies also, there is this rating fatigue, reporting fatigue. And as investors also, we have to look at so many resources that it is kind of confusing for us. So this multitude, and then rating frameworks don't match each other. Some would give it a 10 out of 10. Some would give it a 3 out of 10. Somebody would rate it as an A. Somebody would rate it as a green light or a yellow light. There is so much confusion. Who do we align ourselves to? So I think this plethora of ratings and non-standardization is a big challenge. However, investors also have to look at it a little differently. So it's almost like you get different research reports, but ultimately the investment decision is yours. So ESG ratings and ESG reports also should be a part of the research process. But again, they cannot dictate your decision. You again have to do your own due diligence, right? So you have to talk to the companies, you have to engage. So stewardship and active ownership take a precedence over here. So you try to dig in deep with the aspects that you consider material for the company. And then, you derive information, and then you make a decision based on your own understanding of their materiality and ESG performance. So that's one of the biggest challenges. The other challenge is, again, lack of data. So today, if we look at beyond the top 100, probably the BRR was a very threadbare framework, I would say. It did initiate a lot of companies into extra financial reporting. So that part is still addressed. But then again, the BRR was a very, I would say again, a checkbox kind of approach. So we did not have enough ESG data to compare performances, to understand what a company is actually doing. We hope the BRSR would actually solve much of that data availability problem. But again, it might also create in the initial times teething issues, like corporations not giving us enough information, or the information quality, because again, who is checking the ESG information that they are putting in the BRSRs? There's no audit process, right? So who's giving us what kind of data, how? And then there'll be an information overload. There'll be 1,000 companies coming up with some kind of data. Now we'll have to crunch numbers to understand that data, make sense, look at the temporal, movement of that data. So again, this is going to cause teething issues. But I think, again, availability of data is a good thing, I would say, because that will make your understanding more objective around it. And data has been such a big challenge for us to move pretty fast in this direction. I think it will enable us to do more, more comprehensive research around these topics of ESG. So yeah, I think other than, and of course, accountability, as I already said, auditing is a real challenge. So what kind of data is being put in is questionable. Nobody audits it today, and getting that data checked is again a problem. So yeah, these are the biggest challenges. Then some of the other challenges could be your differences in geography. So regulations. So today, EU has a taxonomy. They tell you what is green, right? So as an investor, today I can, for my European investments, if I have European investments, I can look at their taxonomy and say that, okay, green bond utilization of proceeds can go for this activity because this is very, very well elucidated in their taxonomy. India doesn't have that taxonomy. You can call renewable energy green. I might, and that is also, termed as PSL by RBI regulations, priority sector lending. So I might be comfortable with it. But let's say if a company comes to me with a carbon capture and storage related, project, and they want financing. Now, what do? Is it described anywhere as green? I don't know that. It is not covered under PSL. I want to do something green, but I don't know what is green. So that lack of terminology or taxonomy is also one of the challenge. Now, to address that challenge also, we know that Ministry of Finance is now working on something of which is sort of a taxonomy. So we are hoping that will come up and solve much of our problems. But till that time, when we are in the transition period, so this transition from, a coal-based, fossil fuel-based economy towards decarbonization, there will be a period where financing will need to go for all kind of transition sectors also. So does that taxonomy include those transition periods, terminology for transition sectors or not? That is again a big question. So yeah, there are challenges, but I think slowly we are getting there. Now there is more accountability expected from ESG funds also. So once accountability gets built in, till now everything was voluntary. You gave out whatever information you thought was okay. But today the regulator is expecting you to give out more information. The stakeholders, which are mostly millennials who will be putting their money in mutual funds, they are very much environment and social conscious. They are going to ask us questions. So it becomes a social license to operate for us also. To give out as much information as we can. And then, of course, we also have to, look at these available frameworks and design our investments in that way.
Yeah, I mean, this is such an old debate. From the time in 1992, that's 30 years ago, when the term sustainable development itself, started coming into, we've never been able to grapple with it, right? And really fully understand what is sustainability, what is sustainable development, and, what are the long-term consequences of something that looks very good today? And therefore, this whole concept of precautionary principle, if you're not quite sure, don't do it, kind of things. And it's true. I mean, I suppose this ESG thing is still grappling with some of those. And it's the nature of the animal. I suppose the kind of battle to understand this concept will continue, because it's not a clear concept at all. We all vaguely know idealistically where we are heading. It's about putting, the road to that and the path to that. So
that I notice these days is that everybody's talking about net zero. Very interesting, there's this race to net zero, but it is so vague. You claim yourself that you're targeting a net zero by 2030, 2040, 2050 or beyond, but then how do you reach it? Only very few have an idea. So that's exactly with ESG. Today, you say you are ESG compliant. First of all, let me clarify for everyone. ESG goes beyond compliance. If you are doing compliance, there's no need for ESG, right? Then your compliance officers can do the job. Why am I there? ESG is much beyond compliance. But people call themselves ESG compliant, and they do not fully understand what is. So even I don't fully understand, because the term is so loosely used today. So it could be something else that you believe in ESG, and I could believe something else. So unless these written down definitions exist, we will probably still keep on grappling with these situations.
Yeah, and even with the best written down definitions, there is still something beyond, because it's a vision. It's an ideal that you're trying to reach. So yeah, we'll try our best, I suppose, to write it down and then still know that we have to go beyond.
There is a scope of subjectivity still existing, and it will differ geographically, it will differ sectorally, it will differ in every way.
Thank you, Priyanka. This has been, for me, a masterclass in ESG. I hope the viewers will also find it so. I'm sure, the more you think about it, the more confused I get on some of these issues. But I think from great confusion may emerge some clarity. And, I think your interview has given so much food for such thought. Thank you so much for taking the time off and helping us clarify this very complex concept. Thank you, Priyanka. Have a lovely day.
Thank you so much, Meena. Pleasure here. Pleasure being here. Thank you.
Thanks.